Hey everybody, hi, this is me, Darius Anucauskas from Easy Markets, and this is the Daily Picture International. So, today's Tuesday, and we are starting the show a little bit later than usual. Why? Because I have a special guest for you. I was trying to get this person for quite a while now on my show, so managed to get him. He's a trader from Germany. I hope you will enjoy this session. We're going to talk markets, we're going to dig into different instruments. So yeah, stick around, do not tune out, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. This is me, Darius Anucauskas from Easy Markets, and I hope you're feeling nice and relaxed today. Today is Tuesday, and today we have a special session. I have a special guest, so hopefully you'll enjoy the session. Look, I'm not gonna drag this one for way too long because basically I think we started a little bit late. However, hey, apologies for that. So hopefully you're all watching this one and seeing this one okay. I mean, I hope the stream is running smoothly. You can hear me. You cannot see Jens yet, and you cannot hear him yet because he's not switched on yet. But in a few moments, Jens, can you show up yourself here, please? Hopefully people can hear you and see you. So there we go. This is my guest of honor today. Mr. Jens Klatt has been in the industry for quite a while. Let me just pin you here to be so that people could see you in a bigger picture. So yes, first of all, thank you very much for tuning in, everybody. Thank you very much, Jens, for joining this webinar, this session. I really appreciate that. Took a while for me to get you here, but hey, there we are. So, Jens has been a trader for quite a while, and he has been an analyst as well. So, but you know what? I think I'll allow you to introduce yourself because I might say something, different or something. But yeah, tell us a little bit about yourself, and then we'll go from there.
Hello, Darius. Thanks for having me. And welcome to everyone here in today's show. I'm very happy to be here. As Darius already said, that it took a while, but markets have been a little more volatile, and especially in terms of breakouts. And probably some of you have seen the current Tesla run-up. So catching the meat of the bone there was it took some time. About me. I'm in the industry, I think we have 2024, if I'm not mistaken. So I'm in the industry now for the CFD FX industry for probably 10 years. In fact, I started out right from when I exited school. That was in 2024, I think 24. So 20 years ago. And so the story is that I always wanted to go to university. And in fact, study mathematics. And I talked to my parents back then, and they were like, well, yeah, great, nice idea, someone from university, but still, don't you think it's probably a better idea to learn something and have kind of a job before you go to university? So I was like, yeah, sure. But well, if parents tell you to do this and that, and you say, well, what do you know?
True story. Yes, I know what you mean.
And I go to a bank the same day. The same day I go to a bank, and to get a bank statement. And there was a small line at the bottom of the bank statement asking for trainees for the upcoming year. And I was like, hey, that's great, because now I can apply here. I can tell my parents, hey, you wanted me to apply for a job. I applied for a job, and
rub it in their face, basically. Yeah.
And that's exactly what I did. Well, the problem was that I got a job offer within the next week. So they just reached out to me and said, "Hey, you're exactly the one we were looking for." I was like, "Okay, well, that's nice. Okay, then go for a traineeship." And the thing was that it was the end of school, and we were about to have some some parties,
Yeah, obviously, yeah.
and then you go to your father and say, hey, well, I've never been to banking, finance, and everything. So this whole .com craze, which took place some earlier years, there was
Yeah.
a good friend of mine who participated in that to some extent, on the up and on the downside. So I asked him, hey, do you have a book or something? And he handed me Andre Costolani's. I just don't know the German title. The German title is Die Kunst über Geld nachzudenken. It's the art of thinking about money.
Right. Okay.
In English. And so I went through this and I was hooked. So speculating. So it's not really trading. It's more kind of investing. But I was hooked. I was completely hooked, and I had questions. For example, going short, that just didn't make sense to me back then. It was like, how can you sell something you don't own? And that was the starting point, in fact. And so there was this mathematical, quantitative thinking. And so you're now sitting in a bank, you're filling out, whatever. I mean, the deposit requests from clients or something, but this is not what you thought that banking is. So banking was this fast-paced world with all these flashy lights everywhere. And so I started out and learned more about options. So and warrants and green and everything. Well.
Okay, I mean, no, that's good. That's really good. That's really interesting, to be honest. I mean, and I think that I will ask you this a little bit more in our next series, but which we'll probably do. So yes, honestly, I'm really interested to find out like your story, and we will do another show like this. So for sure. But today, let's talk markets. Okay, let's dig into the charts. Let's have a look what's happening. We'll see, what's your opinion on this, what's my opinion on this. So, and we can go basically from there. But before we go any further, I have to read out our risk disclaimers. So, unfortunately, that's something that is mandatory for us. So basically, let me just quickly put the screen back on here. Yep, so where is that? The content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. As always, the fun stuff finished. Now we can get into the boring stuff, the markets, right? Look, let me just switch on ourselves back here. And okay, now, the first one I'm probably going to jump into. We're going to talk about a little bit of everything here, okay? Me and Jens discussed this show before, so we kind of agreed on the stuff where we're going to look at. But I just wanted to basically pick up on a few here. Let me just share my screen. If you want to add anything, of course, Jens, let me know. I mean, you can share the screen as well. Let me just do that very quickly. So the first one I want to pick up on here is Nikkei 225. So the index. So yesterday, or should I say today, actually, the index rallied again. And I've picked this chart here because I wanted to show the monthly chart, basically. On the monthly chart, you can see that where we are right now. This, I mean, we have overcome the in March, in this year in March, we have overcome the highest point of 1989 and 1990, basically. So that's quite significant. I mean, at the end of, please correct me if I'm wrong, but at the end of this,
be very happy.
Sorry.
Nick Leeson would be very happy about this.
True story. But look, with this one, basically, in the end of 90s, I mean, this at the beginning of 90s, I mean, this has turned very quickly to the south, and Nikkei has suffered significantly. Now, it took us only about like 34 years to get back to these levels. Okay. So my question, actually, me being the contrarian all the time, I'm actually trying to see if this is not going to end up into something like really, really ugly. However, again, I'm not trying to stir up the market here. I'm not trying to, cause panic or anything like that. But it's just that, we had quite a gradual uprise. And at the moment, of course, the market seems to be just going higher and higher. We've created these new all-time highs. For me, from the technical perspective, what I'm looking at here, and I know that I'm looking at the monthly chart here. I want to see if we're gonna stay above the, let's say, somewhere above this 41,000 zone. If we can stay, maybe yes, maybe we could see some like slightly higher levels again. But at the moment, I mean, if somehow we drift back down here, and I think that the market is enjoying the fact that the BOJ is not really like lifting a finger. So I don't know. What's your thought, basically? I don't know. Do you have any thoughts on maybe on the BOJ or something, or how long can they not support, let's say, their own currency, and how long they can continue doing this? I guess at the moment the yen is tragic, but I don't know. What do you think?
To be honest, I think, I mean, I'm in this industry now for quite a while. I'm studying the markets, well, for 20 years. And I think this is the first major currency implosion I will ever witness. What we're currently seeing there, I think this is the end of the story. I think if we look, I mean, we are here currently looking at the Nikkei. We can also have a look at dollar JPY, for example, where I think broke to the highest levels since the late 90s. 90s. I'm not really sure.
Yeah, let me just bring up the chart very quickly. I'll put the ice here. I mean, the bigger, more history here that I have, and again the monthly chart, the same story. So
yeah, late 90s, no, right?
Yeah, this one, the late where is it?
Oh, early 90s. So it's not
early 90s actually. Early, like it's the highest point here. The 160 zone was like the highest or near the highest point of April of 1990, basically right here. So yeah, that's insane for me. Like, I mean, okay, congratulations to the Japanese government in terms of attracting tourism, improving your trade balance. Great, wonderful, but that's not really like a long-term solution. I mean, that's a short-term solution. So,
and I think they lost control. I think they can turn around now. I think that was clear probably 10 years ago. I remember back in the days when I was working for a quite large broker back then, discussing JPY and the start of Abenomics with the managing director back then. And the first thing he said was, well, if you start such a QE program, in this case it's QQE, right? It's not just QE, but it's like we also manipulate long-term yields here. You can turn around, so you have to continue and go more and more and even more aggressive. I think the main reason for, and then coming back to Nikkei and the push higher, is that the BOJ is there's a complete different approach to the quantitative easing we've seen here with the ECB or the Fed, for example, with buying bonds. But in this case, they are also buying aggressively ETFs. Or to put it differently, I think the only reason we haven't yet seen the complete collapse of JPY is that most of the outstanding debt in this case, so we're not talking about equities, but debt in this case, is in the hands of Japanese people. So you're in fact unloading your, well, how can we say, economic problems or demographic problems or whatever. You're unloading them on the overall Japanese population. That's what you do, right? And I think you can, and it gets very political, right? Right from here, in fact, because the thing is, it's also about the demographic developments in Japan, for example. I think they have the lowest birth rates worldwide, if I'm not mistaken. I think this is a clear sign. So if everything was fine and everything was cool and working out smoothly, as they probably hoped, well, then people would look a little more, let's say, optimistic into the future. And if you look optimistically in the future, well, you go to bed with your wife and little kids come out of this, right? So this is usually what happens. And I think this is a perfect illustration that things are spiraling out of control. And so to coming back, well, I think that I'm not sure. Well, I'm not very good in picking tops.
What do you think? What do you think about, let's say, in terms of USD JPY? Let me actually bring that back. Let on the bigger picture here. What do you think? Like, I mean, can we go? Because I'm kind of aiming for this 177 zone. Initially 165, of course, but then 177, something like that. I'm aiming for those levels. Do you think that's or maybe even higher, like 200, psychological 200? Maybe this could be, a crazy interesting move here. Again, this is from what I'm seeing right now, and from the hesitation of the BOJ to make any action, to do any action. I mean, for me, like I said, that's the path I'm seeing for them, is like for the continuation of the devaluation of the yen, unless everybody starts shifting into the yen as a safe haven if the markets turn sour. But again, it's a tricky moment, especially with USDJPY, because US dollar is also safe haven. So it's kind of which one you're gonna jump into. So if, let's say, the US markets turn sour, again, for me, like, I don't know, what do you think in terms of, let's say, USDJPY target, roughly?
So I think 177, 180, so around, I think is a solid target on the upside. The thing is, well, now attendees here, so visitors or viewers will say, hey, well, that's an easy trade, right? So things are spiraling out of control. They're losing control of the JPY. They haven't yet intervened, and they haven't intervened against 160, for example, more aggressively. And then it's an easy trade. You just go long. The problem with this is, as you already mentioned, first of all, the safe haven idea behind this. So like people are probably, if there's a risk of an aggressive risk of move, you see capital flowing back into the JPY, which could result in a sharp reversal. And beside of that, you also have the problem that you must be aware of the fact that the BOJ rather sooner or later has to make sure that they're not completely losing it, even though, well, we might probably agree that they already lost it. But and they will intervene, and that means there will be sharp pushes on the downside, which will naturally result in larger drawdowns if you're not working with a hard stop then, and you have to face these drawdowns, which makes it very difficult to trade this, also from a risk-adjusted perspective. So I really, if the let's say call them the best trades, I would probably call them, or it's not the easiest trades, but are momentum breakouts to the upside, where you just say, hey, I have a hard resistance on the upside, and there were some tests of it, bounces, and you see higher lows and an ascending triangle to some extent if you want. And then we take the breakout, and I go very aggressively with the stop and try to catch the momentum. It's a pure Momo trade, if you want, move to move trade, and you try to trade this, and always having in mind that there's the risk that some financial official from the, I don't know, Ministry of Finance or something, or BOJ itself, comes out and says, hey, by the way, guys, we just plan to intervene, bang. and you just see a massive flush on the downside. Exactly. And I think we've seen that several times.
And 150, when we were hitting 150, that's when we saw that.
Yeah. And so this is making things very difficult. On the other hand, if you're follower of the price action and you see these interventions, you know that it only takes time since we are back to the intervention levels and above them. So which means if you see the selling pressure, or in this case the buying pressure of JPY diminishing, then you start to probably scale into a position with the target of a drift higher. The problem is only that, I mean, the guys at the BOJ, they are not stupid, right? So they know that this is exactly what speculators do, which means like they will punish these guys trying to bring us back to the intervention levels, and then in even more aggressive flush on the downside. So which again makes it very difficult to trade it. At least longer term. So I think short term, there's some very interesting move to move trades. In fact, and it's moves, way right? Upside moves, especially. So I think the downside is very difficult. It's also true. I mean, you could speculate on such a flush lower, but the problem is, first of all, you just have to time it right, and beside of that, there's also this massive overnight costs involved due to the negative carry, right?
Exactly. So that's what I wanted actually to say. Right now, at the moment, if you're in it, you're probably your swaps are positive, and you're probably enjoying the moment. So kind of. But the opposite, let's say right now, if you would short, then yeah, then this would eat you a little bit more. Anyway, okay, look, right, good, good. I think let's jump into something else as well, because I think that we can actually dedicate the full hour probably for that, for the Japanese yen as well. So,
Easily 2 hours.
look, I like it as well. I mean, for me, like I said, I'm really carefully monitoring it because I mean, what I'm seeing here, USD/JPY, yes, of course, great. But let's say something like the pound JPY as well. That's like for me again, it's also something crazy, and we're above those 200 levels. I mean, for now, yes, that's like one-way traffic at this point. So again, I'm also aiming for those like high levels here. But anyway, enough with the JPY. Actually, I wanted to go back into indices here because I still want to pick up on a few stocks and the US dollar index as well. And actually, but before we jump into the US indices, US dollar index, let's have a look at that one. Again, for me right now at this point, I'm really stuck with this, and I'm really stuck. And again, looking at the Fed and what's on their agenda, they're trying to shift away from the whole idea of trying to, or let's say, or thinking of hiking rates. Of course, everybody's now trying to force them to cut the rates. According to the FedWatch tool, we do have no cuts this month, but they're expected to do something in September. Now, the probability keeps on rising, so they're saying that in September we'll have a cut for sure. And then by the end of the year, I think that they're showing the 2 cuts. Look, in terms of by the end of the year, I don't know if it's going to happen 2 cuts or not, because we have been promised 3 and 4 cuts in the beginning of the year as well. So, but then everything kind of changed, and I don't know. That's why I'm not trying to predict that side way too much. For now, I think that what they will do the cut. I don't know if you agree or not, but I mean, I think that they will go for a cut. Maybe, in my opinion, maybe I'm wrong, but it's more maybe like political, to support maybe Biden a little bit. Like, hey, look, I mean, I've managed to draw, attract him again, like help you out with the housing market again. You can go and get your mortgages and stuff like that.
I'm sure he can't remember that.
True story. But that's what I'm saying. So I think that they will do. Yes, they will do. But how will the US dollar react? Well, I think that yes, there is a little bit of potential downside moves for the US dollar. Maybe not much, maybe somewhere back to, I don't know, 102 zone, 101, something like that. I do have this little technical setup here. I have this little line, which I like. And again, this is somewhere roughly around 102 zone. But for me, I'm going on this one, to be honest, at this point, I'm going purely from the technical side, because if we do get a drop below that 200-day EMA, then yes, I'm going to lean a little bit more towards lower levels. Again, of course, we're not forgetting about the fundamentals, but at this point, I'm not really kind of excited about that the US dollar could get stronger, unless the market starts reversing sharply to the downside. So, but again, what do you think on the US dollar?
Well, I think
look, disagree with me, please.
I'm not really sure. To be honest, I probably I hope for volatility, let's say, but yeah, I don't really see it, let's say. And the reason is, even I think we can have a bullish and also a bearish case. In fact, I could imagine that one of the reasons why US dollar is holding up solidly, let's say, in the current environment, especially with the just most recent economic data, is probably due to the fact that I mean, it's getting more it's more and more likely that Donald Trump will be the next U.S. president. Yeah. And what we've seen in 2016, when he was elected first time in November, was that there was a sharp rise in the U.S. dollar back then, and that was due to this "Make America Great" approach. Make America Great Again approach, which resulted in capital inflows into the US dollar and speculation in terms of fiscal stimulus and everything, which was, by the way, also a big driver higher for dollar JPY. And that's probably one of the reasons why we are holding solidly. The thing is, now, if we are about, and this is even more surprising, to be honest. So, well, I think the next step will be a rate cut, which means like it's just a starting point. So most likely we will continue lower from there once we are within such a rate cut cycle. And so therefore we hold solidly well. And then I think it makes sense to probably switch a little from the US dollar to the currencies, especially probably the euro, which are trading against the US dollar here. So in this basket, I think the US dollar or the euro is weighted by 60% or so, right? Compared to JPY, GBP, and so on and so forth. And then looking at the European landscape, especially the political landscape, I mean, I think we certainly could have seen a massive sellout of the euro here yesterday, in fact, after the election, if the RN from Marine Le Pen would have gotten probably the win and probably even the absolute majority. But the thing is now the result is, well, I talk as a trader, it's probably even worse. So
exactly, because now it's like a little bit instability. Either, it's always better. Like either we're going down or we're going up. Like tell us what to do. It's like. But when you're in this little limbo, I think right now we're in limbo. Like it's unclear what's going to happen. I agree with you, because now, I mean, look, with this, from the technical perspective, from my side here, I had this little falling channel moment here, and this is where I was like talking in my show that basically if Le Pen wins, this could, maybe be bad for the market because then everybody's uncertain about the European Union and stuff like that. But actually, the euro actually rallied, so it seems like it was a good thing. So fair enough, fair enough. That's fine. And now we're seeing that the left won and it should be positive, and now it's like nothing's happening. So I think that the euro will wait and to see what the ECB is gonna do, in my opinion, because are they gonna do another cut or no, or what's the situation? I mean, for me at the moment, I think that they might do another cut. If the Fed does a cut, I think the ECB might do another cut as well. However, in terms of, let's say, cuts right now, I mean, I can't remember. Do you remember what's the current interest rate in the eurozone? Let me just 4.25.
4.25, right? So 4.5 before, and then they cut first time.
Yes. Again, I don't know, like to cut another 4.25, but okay, in their inflation right now is 2.5. The eurozone inflation. Okay,
is this true?
I don't honestly, I don't believe that, because honestly, when you go to the supermarket, I'm sorry, which inflation are we measuring? Socks maybe, I don't know, socks maybe, yeah, they declined a little bit.
Even beer is something like 50% higher. I mean, what shall we say as Germans?
Exactly, that's what I'm saying. So it's like, that's why for me this, I mean, okay, these inflation numbers, of course, we look at them, we accept them as they are, but do we believe them? Not really. So that's why for me it's interesting actually if they're gonna go for another cut. And I don't know. For me, I think that they will just right now drag it, and maybe if the Fed does a cut, I don't know. It's going to be very weird to see the ECB going for a cut, because then for me it would be just a sign that you're just basically doing whatever the Fed is doing, or whatever the Fed is telling you to do, or something like that. I don't know. Again, maybe I'm way too contrarian and controversial and stuff, but for me it doesn't make like sense. Anyway, we'll see. For me right now, I see euro kind of wobbling here. Maybe actually, like looking at this technical picture, I mean, it might just be moving sideways in between, somewhere between like 1.09.5 and 1.06, something like that. I don't know. It's stuck. It needs some sort of a catalyst, and at the moment, either is going to be the US dollars that's going to like flush, or maybe it's going to strengthen. But from the euro side,
the interesting thing is, so right now, we talk trading in terms of dollar JPY. So I really think that euro, for I think years now, since the beginning of 2023 minimum, is very unattractive in terms of trading. But still, I have a position, and I lean towards the US dollar. And how do I do this? If clients ask me and say, "Hey Jens, how do you trade Euro USD in the current environment?" Well, I say, I trade it in terms of my trading account. So my trading account, especially with my focus on US equities, is US dollar based. So it's not euro based anymore. And that's my trade, in fact. And I'm holding this euro short, in fact, position since the beginning of 2021, which was probably a good time to be short. So I'm ahead from there. But this is my current position. And in fact, as of now, I don't plan to change it. So I haven't yet switched it back to euro denominated account or something like that, but I keep it in US dollar because somehow I have, well, looking probably to the political landscape. I mean, I just asked the simple question for myself. When do you plan to invest? Where would you invest? Would you invest in Europe or would you invest in the US right now? So, I mean, let's face it, also the US is a mess. But when looking here in especially Germany, for example, you just realize, hey, this is the biggest economy and they are just wrecking it. For whatever reason, I don't know, but they are wrecking it with their ridiculous politics. And that's one of the reasons. And now looking at the second largest economy in Europe, it's now a socialist country. It's France. So, like, I mean, and these are the two biggest. And then third comes, I think it's Italy. Not really. Is it Italy or Spain? I'm not sure. Spain is Spain. Or? Well, let's look at Miss Meloni, because I love Italy. I really love the culture. I love the language. I love the food. I love it. I really love it. But I just don't know what to make out of Miss Meloni. So somehow she makes the impression of being a very nice, down-to-earth woman you can have a wine with and talk nicely. But I mean, but you just know, you just don't know. Well, probably she has to take a step back sometimes, because she has to be careful. So to be nice to the socialists and let's say the left wing guys to some extent, and that's why she's nicer and probably gives them more than one finger, but probably a whole hand. And then one day she will turn around and smile
and bite.
and diabolically, and then bite. I don't know. But looking at this, I mean, I have no real intention, motivation.
Let's put it this way. For now, you're probably more, let's say, bearish on the euro in general, right? I mean,
yes,
right. Especially against these like major counterparts like US dollar or the British pound, maybe even. I don't know.
I was a big fan of British pound, by the way. So when they exited the eurozone, that was when I said, well, that's probably short-term negative for the British economy, but longer term, I would say it's positive, because of now they are out of this Brussels bureaucracy monster. Like they can really focus on small and mid-sized companies and make very attractive tax laws and thus attract capital that way. Somehow didn't work out in the first attempt, didn't work out. So now they have, I think there's a Labour Party now, because the Tories completely messed it up too. Well, but probably the second attempt will.
I just found a person who probably wouldn't like you right now. You know who? Ursula von der Leyen.
Ushi.
Anyway. Anyway, listen. Let's jump into very quickly while we were on the U.S. topic.
I think she wouldn't like me. I really, she wouldn't like me because I'm short on Pfizer. I don't like these guys anymore. So
look, let's jump into some U.S. indices very quickly. Dow Jones Industrial Average. Now, this is what I wanted to pick up on, and this is what I talked about in my recent shows. Basically, yesterday we had a spike here. Fantastic. I talked about this little technical setup here that I have. I was kind of, from the short-term perspective, I'm still leaning a little bit more towards the upside on the Dow. And my kind of reasoning is a little bit maybe not very conventional or anything, because looking at the S&P, looking at the NASDAQ, these guys here are hitting these new all-time highs, and the Dow is kind of lagging. So it's in a way, I think that Dow will have to catch up and will have to go and do a new all-time high as well. We had something similar recently this year where the Dow and the NASDAQ were also hitting new all-time highs, but the S&P was lagging. So then the S&P kind of caught up. So I'm hoping to see the same story happening here on the Dow. Again, it's the industrials, of course, are a specific topic, but I'm kind of still leaning, like I said, more towards the upside on this one. Let's see, of course, let's see. In general, I just wanted to quickly jump off and talk about what I said in my yesterday's webinar to people who are watching. Basically, I said that from the short-term perspective, I'm leaning towards the upside, and I was aiming for that psychological 40,000 zone on the futures. And I'm looking at the futures here, and we managed to get that. So it was more of a quick touch, but hey, the target got reached. Fantastic. Now the kind of the problem is that will this remain? We're jumping into this earnings season right now. We'll see how the companies are performing. What do you think in terms of this? Do you think that Dow could, let's say, go a little bit more to the upside, or are we actually, we had enough and now it's maybe down move for Dow?
I think from a seasonal perspective, I would lean to the long side, in fact, because of the extension on the upside, and because there's such a low volatility environment, and everyone is like saying, "Hey, we run up that much now," especially in the S&P or also in the Nasdaq, and that's probably the best environment to continue to at least drift higher, and probably the Dow will follow. Probably lag a little. I think it depends also mainly on the overall how we say that composition of the index. I think so, especially when looking at the big tech names, at Nasdaq, for example. I mean, we have seen a massive breakout, 2 new all-time highs, mainly due to Apple, Microsoft, Meta, Netflix. Did I miss someone? Meta, Netflix,
Nvidia.
I mean, Nvidia's right now a little lagging. So compared to Amazon and Meta with the breakouts higher. So Nvidia is right now digesting a little, which is probably a good sign. So I compared it to, in fact, the period between March 8th, I think, to the earnings. Was it the earnings, or it was a little, well, mid April around,
Earnings,
and then the breakout,
and May,
and then the May breakout, right, 2-month digestion probably, and probably we're within such a period right now. Once again, let's see whether we continue to push on the upside, and then see new all-time highs then. But so that's probably one of the reasons to be a little more skeptical, let's say, because I think the semiconductors were the main driver for the bullishness in the first half of the year, especially when it comes to the Nasdaq. I think they don't play such a big role in the Dow, right? So I don't really know what the composition is, but
let me just quickly have a look. At the moment, this is what I'm finding right now. So the so the components of the Dow right now: United Health, Microsoft, Goldman Sachs, Home Depot, Caterpillar. So Visa, Salesforce, McDonald's, American Apple, yes, JP Morgan Chase. So, no, not really. So it's more of a
and Nvidia is not in it, right? So they have to get it in after the split, probably. That's probably one of the reasons why they did the split. Oh, well.
But yeah, of course, I think it's general consumer related stocks, or in health stocks as well, and financials, of course. By the way, in terms of financials, we have JPM reporting on Friday, if I'm not mistaken.
I wanted to get it short at the beginning of the year. Was a bad idea. Never really. What was it? Yeah, around there. So it was a massive run up. And then we had this reversal candle, and I thought, well, probably we are going to the mid 150s or something. That was the trade. So in fact, I cut it out, nearly break even. But as you see, well, it was a bad idea to go
you
short.
Think? Listen, a quick question actually. Do you think logically, because we're expecting the Fed to cut rates, right? I mean, do you think? Oh, no. Do you think that JPM could actually benefit from that somehow, like in terms of? If the Fed cuts some rates going into next month, or sorry, not next month, September, do you think that JPM could actually benefit from this and maybe push further? Because let's say because they're the biggest bank in the U.S. and maybe people will run towards them, for mortgages and stuff like that, or loans, or something. I don't know. I mean, for me, this is I cannot answer this. For me, the reason why I cannot answer this straight away is because that it's like right now we're in, let's say, slightly maybe higher interest rate period, here, and JPM, either they're acquiring a lot of savings, a lot of people putting money into the bank because of the savings, or is there something else? I really don't know. I mean, for me, like I said, I'm how to say, mixed a little bit on this, because I'm trying to figure out which one's outweighing what. So would let's say a lower interest rate environment, or a drop in interest rates in this environment, would actually attract even more clients to them, or would that be something like an outflow of funds, because everybody's like, oh, I'm not getting like a better rate or anything, and let's pull it out. So that's I cannot really like answer this question. I don't know, maybe one of our viewers actually could, who's watching right now, but maybe they can answer us. But I don't know, what do you think?
So it's difficult to answer.
Exactly.
First of all, it's difficult to answer because it's difficult to answer, but also it's difficult to answer for me, especially because I'm not really in financials and so in financial stocks. So
You're more in Tesla, right? Or
I'm 100% in Tesla. Sure. I mean, this is the big story. But let's talk about JPM first.
Okay.
Because the question now is, so I mean, if I build my portfolio, it's not just trading wise, but also from an investment perspective, so longer term, I always ask the question: hey, has this the potential to, let's say, double from here, or to outperform the market return wise in terms of the yield I can expect when it comes to the overall market? And so looking at the chart right now, I mean, it was fantastic, right? So there's no reason to be short the stock, especially following the big financial crisis, respectively the big financial crisis, COVID, plus the bear market in 2022. But if I look at it right now, and given everything you just mentioned, I would say it's risk-reward wise very unattractive to be long this stock. So I would probably trail my stop, probably scale out of a position if I had one in financials. Mm-hmm. And I think time will tell, but overall I think the overall impact of rate cuts is more negative than it would be more bullish in terms of more mortgages and what you already mentioned, because it's not just, I think, that we are seeing a potential negative effect in terms of like lower yields usually affecting financials in a more negative way, but also that rate cuts usually tend to result in lower volatility. So they are not a trading powerhouse as Goldman Sachs or Morgan Stanley or whoever, but I think that this is also something we should take into the overall consideration here, and this could probably also weigh negatively on the stock. So again, risk reward wise, I don't want to be long the stock here anymore. So that doesn't mean I want to be short, but I also don't think that we have so much more room to go on the upside.
Okay, makes sense. No, because look, I mean, for me, from the technical perspective, I mean, I don't like entering something like this here at such levels, and honestly, like, without any retracement, I need a good fall before I can actually pick up on something. What's the point of like buying when it's way too high?
I mean, it's completely fine, right? As a contrarian, as you said, a mean reversion trade here seems to make sense. The problem is that financials usually don't tend to perform well in such a mean reversion environment. So therefore, you need a growth name like an Nvidia, for example. Even a strong stock like an Nvidia pulls down 10% and makes a lot of fun intraday if you catch the right point, right?
Exactly, I totally agree. Listen, you've mentioned something which I actually liked, and that's Tesla, because okay, I want your because last week Tesla saw this boost. I think that they came out like with projections and orders or something, or like, what was it? Was it like?
It was deliveries, but I think the main focus was on the Tesla energy department. So I mentioned this not years ago, but months ago already, that people are too focused on deliveries right now, and the deliveries in general, production, and then. Well, the argument was, numbers are dropping due to high interest rates and everything. And you're just like, well, if you think that Tesla is a car company, well, then you might have a point, but it's not. It's never been, in fact. So, in fact, that's the great thing about this is, and that's why I, in fact, love the stock. I love the stock. And you really careful about this, loving a stock.
Yes, exactly.
But I look at this story. I look at, and in this case, the CEO, like Elon Musk. You read or listen to his autobiography, for example, which was just published by, I think, Walter Isaacson. I think he also wrote the biography of Steve Jobs, if I'm not mistaken. And so you start to understand this person a little better, and then you start to read, for example, some blog entries from him years ago with his master plans, and we just like, yeah, master plan, ooh, like and then you read through this, and it starts to make sense. So if you look at the whole picture, well, you start with a high-priced car in the mobility sector,
Yeah.
and then you bring it to a broader audience. Then we are probably coming down now to a 25K Tesla. The thing is, they make so much money. They have a free cash flow of something like 4 billion a quarter. So you're sitting on a I'm not. Am I allowed to say the SHIT word? So,
No, it's okay. It's okay.
okay, so like you're sitting on lots of money,
Yes.
okay, and you have to invest them. So, well, you can still buy, not buy competitors, but also build new gigafactories and everything. But you could also say, hey, let's expand our business. So now we are going to the AI sector, FSD, full self-driving. You have now the energy sector, which is right now growing at on a quarter basis, I think with over 100%. And people are underpricing this, and that's why I think we're going parabolic from here. And probably
with Tesla. Sorry, I'll interrupt you here. I mean, I agree with you, because again, in general, if they continue, of course, if they would continue their main focus around cars, then I think that they would quickly go under, to be honest, because honestly, China is very quickly picking up, and the cars that are coming out from China right now, the electric vehicles, they're like, honestly, they're beautiful, they're good, not all, but much, probably it's like 50-50. They look good. They can actually give a good run for their money for Tesla, for its money for Tesla. So like the BYD, you have your what's the other one? I can't remember, Nissan or like Busan, something like that. But anyway,
Lee,
but
Neo.
The Tesla, the fact that Tesla is trying to move into countries like India, for example, right, where maybe they can actually support the whole grid system and create the whole grid system. That's okay. That's wonderful. I mean, I'm looking at this, I'm thinking, like, dude, you're doing good. You're actually, this is the smart way of going further.
And it's difficult. It's so funny. As if you read, for example, I mean, I'm in Berlin, so this is like we have the gigafactory right out of our doors. Like, okay, so he's the biggest employer in this case Brandenburg. So this is like the state around Berlin, and it's the biggest employer there. And then people start to somehow, well, they try to bring up some negative publicity, and it's just like, what are we talking about here? I mean, no one is perfect. Okay, first of all, that's the first, but this guy is doing so much good to humanity. In fact, it's difficult to not like him if you're a good person. It's just well, it's not possible, right?
This is the moment where the critics are gonna launch their hatred and everything. Anyway.
But I have my sons. My sons are on my side, because this is the guy who's building these rocket ships, these SpaceX stuff, and that's why this guy is the best on earth.
Good to know. I keep on joking sometimes that Tesla was created. You know why this company was created? To actually boost Dogecoin. So to speculate.
And you know what? You know what? You might be right.
No, I'm joking, of course. Anyway, look. Okay, look, let's jump off from the corporate world. By the way, I think Pepsi is also coming out with these earnings this week. And, well, if purely from the technical perspective, I'm leaning towards the downside on this one. I mean, this is looking very, very bearish. However, again, key support zone, let's see if we can clear that. If we can. From the fundamental side, I probably cannot say too much, because I think that people are in a little bit of a saving mode right now. They're not. Yes, of course, PepsiCo is doing a lot of products which are like on our day-to-day necessities. They produce a lot of these products. However, I think that people are kind of
I lean towards tea,
opting into slightly cheaper brands. I think so maybe again. I don't know. It's just a food for thought there.
But in this case, so I looking from a trading perspective, I think the earnings are on Thursday, pre-market. So usually what I trade or I tend to do is right now no position, but I consider this to be a very important support zone too. So which means if earnings disappoint, if they come in as expected, whatever. In fact, what I'm looking for is like a gap below the support area, and then we wait for the market to open, and then we see whether we can reclaim it or not. If we can make it above that, well, probably it's a good short. And I think risk reward was that's 5 points or something on the downside, 6 points. I think that could be even for a value stock like Pepsi a good risk reward trade. And I think it's also spread wise. I think it's quite tight, so there's enough pieces floating around. So probably that's certainly something to keep an eye on, especially if earnings come out. You have the news catalyst, and what I then like to see is, especially in the pre-market, that there's enough volume coming in. So let me just check here my second screen. How many pieces were traded here on average for the last 3 months? 5 million pieces. So like if you have something like 500,000-600,000 shares being traded in the pre-market, I would say that, well, obviously there's interest from the institutional side. And then if we hold below this support level, that could be an interesting short play, in fact.
Okay. Let's see. Like I said, I'm going to be carefully watching this one as well. I mean, I would love to see this one going down a little bit, to be honest, in order to maybe like pick it up at a later stage. But anyway, okay, look, before we kind of run out of time and everything, I just wanted to jump into a few things as well, maybe a little bit on the commodity side, if you don't mind. So just, of course, our gold. And with gold, I talked about this in my previous sessions, and basically I was telling everybody, okay, if it's just purely from the technical side, then yes, we had a nice break here of this downside line. I talked about this, that hey, this could open the door towards these barriers right here. Fantastic click. I'm happy. I'm very happy. But then what I was also saying, look, we have this 2,400 kind of psychological-ish barrier. If that gets cleared, I think that yes, everybody's like watching then the all-time high, the 2,450 zone, or maybe even the 2,500 mark. Again, with gold, I mean, of course, we need to keep an eye on what's happening with other central banks, like the Chinese central bank or Indian central bank. You know, who are they acquiring, or the Russian central bank as well? Are they acquiring the?
I just recently heard that it's the second month in a row that the Chinese central bank didn't buy gold. I think, yes, or at least not officially. I think that was the last headline I read.
Yes, I saw this something as well, like this as well. But again, it seemed like for now, gold is a little bit. It took away all the attention from it. To be honest, it's quite interesting. I think maybe that's what they're trying to do, like remove the whole attention. In general, I would
like that you say that, because I was always thinking that I'm kind of weird or like a conspiracy theorist, but now you say the same thing as I said. I think there was just like it was a too easy trade and it was too obvious, and everyone seemed to pile into gold. That was around February, March, right, when we saw this large run up here, and so it was just it was just too extended. Like, and I told people, hey guys, wait a second, let's digest, and it will probably take months, probably in the second half, probably even into the end of the year. Yeah. And the interesting thing is, by the way, it will be very difficult to show this now, but if you have the time, then just go back to, let's say, 2000, probably 1998, and look at the rate hike cycles, respectively the rate cut cycles, and then overlay the charts. So gold with the yield levels from the Fed, and you will find out that once we started a rate cut cycle, and we are about to start one, over the course of the last 3 or 4 rate cut cycles we've seen within the last 20-25 years, that gold more than doubled, sometimes even tripled from here. Mm-hmm. So that's one of the reasons, if people ask me, well, coming back to the US dollar question, in fact. So right now I lean towards the US dollar, but if I had to put my money into one trade and I have to choose between US dollar, euro, and gold, I'm currently saying, well, if I don't need the money for the next 5 years, I buy gold, because I somehow think that we are about to see significantly higher prices in the next 5 years, somewhere at around 6,000-7,000, and people just like, what? that's just like triple. Yeah, but given the history of rate cut cycles, I think this is probably. I think this is risk reward wise. Even if it looks extended, it's still the best trade to some extent.
But do you think, let's say, because I'm looking at the chart right now, I mean, at this point, because I was kind of leaning towards the idea that, yes, I agree with you in terms of, let's say, for gold to continue going higher. Even, let's say, for me, like the next target like is around 3,000. I mean, we're actually. Well, looking at this chart, I mean, I have this 2,600 and a half. This is like maybe we can call it maybe medium term target, but in general, 3,000, I think that's quite possible. And I agree with you. But the only thing is that what I'm trying to figure out here is I would love to see a little correction first. I mean, and this is where my problem is, that I'm trying to figure out if there will be a correction before, let's say, rallying again sharply. Now, it would be great to see this one dropping maybe back to this 2,100 zone, something like that. And for gold, it wouldn't be a problem. But again, I don't know if this is not going to end up just parabolic and, you know, that's it. So it's we're off to 3,000 or 4,000 and without any retracement. So this is where my kind of I'm trying to figure this thing out yet. I don't know the answer yet. I'm waiting for this one maybe to give me some sort of signals. But
I agree 100% with you. So like, see, I really love to see such a correction, but I think over the years I came to the conclusion that it's more likely to go straight away parabolic up, and the reason is, or I think the reason is that we have a very yield sensitive asset here with gold. So focusing on real yields especially, and what I found out over the years is that these yield sensitive assets, it's not just gold, but it's also currencies to some extent, but also and especially bonds, they tend to be really, really stable in terms of trend. Like, and if they trend, they just continue moving higher. And I think that makes it unlikelier that we get to see such a price correction. But well, if at all, some kind of time correction probably over time, that we are building some kind of a
Would you think that a stronger dollar, for example, a stronger dollar could actually correct this, force gold to correct back down? Like a much stronger dollar, let's say, if we don't get like any cuts or anything like that, suddenly the Fed says, you know what, scrap all the cuts this year, and dollar like, woo, great, fantastic, let's go.
Do you really think that Jay Powell can do this once Donald Trump is the next president? Just imagine. Do you think that he will return to Twitter? So that's the first question I have, right? So if he returns to Twitter, I think then Jay Powell will certainly say, okay, well, rate cuts are probably an option.
Well, anyway, we'll see. Look, by the way, in terms of actually like precious metals, but do you think maybe silver could be a better option in terms of let's say value, finding value somewhere, like, or
I think probably risk reward wise, it's probably even better. But the problem is, I mean, I consider it's not a speculative item for me. So when looking at gold, for example, I tend to really buy physical gold and not going for well, sometimes there are some trades I do in that, but the main focus is in fact longer term, and then really preserving my capital and have a hard bar in my safe, and say once I'm lying somewhere to tell my kids, here, take the bar and go live. And this is the reason why I tend to gold, because silver is just too volatile short term. But I think risk reward wise, this is a more interesting trade. And I think once we go above the highs, I think when we just recently broke above $30, we
cleared the $30 again. So
okay, that's interesting. So because now this digestion here, once we break above the highs around 32.50 or something, I could imagine that we are off the races for another 20, probably 30%, and up to 40, which is probably even more attractive than gold, probably, even though gold will certainly follow in.
Okay, no, that's good to know. Listen, and also I wanted to quickly, what do you think about oil? Because this one's falling right now, correcting back down. For me, I said I talked about this already, like in my webinars for, let's say, a month
Sorry to
or
say that. Sorry to interrupt you, but it hurts. It hurts so bad. You can't
for me,
imagine.
like I was
I
basically.
bought it. I bought it right at the bottom around 72 or something. And sure enough, I was too greedy and put on too much size, and was too fast with my stop.
Yeah,
Just got flushed out, break even, and then it took off.
yeah,
So like
yeah.
it just hurts. You
I was
put
like,
this.
talking to people, and I was saying that, look, if we clear the $80 mark, I mean, that was quite a significant one, then we could go further north. And we did. We reached almost the $85 mark. No, so now the question for me is like, can we clear this? At the moment, we're seeing a correction. That's fine. But as long as we stay above the $80 mark, I'm still kind of bullish on this one, to be honest, and something like this. And I think that we could end up traveling maybe all the way towards that 87.5 zone, or maybe even like all this way to 90, 95, something like that. But again, that's for me like a bit of speculation, maybe way too far into the future. But at the moment, I'm watching that $80 mark. I don't know, like, I mean, if we can stay above it from the technical perspective, I'm still bullish on oil. I don't know. What do you think?
Do you have any insights into the seasonality in oil right now? So did we just enter into the most bullish phase of the year? I'm not really sure. But something tells me that we are probably that we've seen already the turning point, probably.
Well, the thing is that what I'm going from is from all the madness in the world that we're getting, right? Okay, at the moment we're getting the madness, but all the conflicts and wars and everything, and but the only thing is that the supply is still there and demand has a little bit dropped. So that's why we saw like maybe oil not going higher initially, but now I think that they started this whole madness is increasing now, to be honest. And the way I'm seeing everything is the world is crazy. The world has gone stupid. And I think that this is what's now like maybe driving that fear a little bit, that there could be issues with supply side, and maybe that's why oil has started picking up. And because people right now do not see any solution to any conflicts or anything like that, we just need now China to do something with Taiwan, and that's it. Kaboom. I think that this is going, like I said, the world has gone crazy.
In fact, so that's one of the things I recently told my father. It's like if you look at the U.S. right now, especially with Joe Biden, and it was clear right from the start that there's and no one really knows who's running this country right now. So who's in charge of the biggest economy in the world?
Rothschild.
And then you look at all the developments and you see, well, there's obviously an attempt to overthrow this big guy in the room, the US, and China wants to overtake the US, right? So want to get rid of the US dollar as the world reserve currency and everything. So if you really want to achieve that, just go and say, well, Taiwan is Chinese now. Just do that.
I know.
It's game over for the US to some extent.
True.
And I think the thing is,
without going into too much politics, like this.
Yeah. Well, the question is, I'm just wondering, is this really bullish for the for oil in this case, or is it more bearish? It's short-term bearish probably, because there's a kind of a risk-off aversion. But you will naturally see that there will be rate cuts. Certainly, there will be attempts to stabilize the economy. In this case, probably also there will be attempts to somehow support the Chinese economy to some extent. We know that China is a big importer of oil in general and needs oil, which means there will be a massive demand, which means that after an initial flush, there will be probably a run up in oil prices.
Look with oil. What I think as well, that look, we need a bit of a, let's say we need some sort of a blow up on the whole idea of EVs. If suddenly, let's say for example, there's a drop in demand of EVs and nobody's buying EVs because maybe everybody starts saying that, oh look, the infrastructure is not there, we cannot support this and this and that, everybody's going to shift back to
how's the infrastructure for EVs in Cyprus? So I was talking about this yesterday with my best friend. He was looking at just saying, just imagine the following, like we want EVs and where do you charge them? I mean, there's no
Look,
infrastructure. So is this the same?
it's an itchy subject. I mean, to be honest, I mean, and another thing, look, I mean, with EVs, I mean, it's something that's again, it's a lot of debatable. I think we need a separate show for that, you know, because with well, all the elements that you require to produce EV, honestly, like I don't know who's creating more positivity for the environment. So that's like a little bit of a, like I said, an itchy moment here.
You just bashed Elon Musk. That's not nice.
No, he can continue doing all these satellites and I think, the Starlinks, and honestly, these work fantastic. The Starlink. Have you ever seen, by the way, Starlink passing?
Well, yeah, sure. He is like in the sky. You can see it. So like, look at this. Oh, there's so beautiful stars. This is no stars, kid. This is Elon Musk.
This is yes. That's why buy Dogecoin, right?
And, oh, by the way,
not advice.
Have you heard that SpaceX will potentially go public this year or next year, something like that?
I think initially I thought it was like maybe just a more of a like a catch thing to attract investors into Tesla or something like that. But if they do, okay, fair enough.
I just read something about this, that there was a new round which is like valuing the company over 100 billion or something like that. So and I also heard rumors that there's some plans. Well, my wife came to me and said, "Hey, I want to buy some stock. What do you think?" Wait till the SpaceX IPO, then go all in, and we will retire rich. I don't need to work anymore. Great.
Well, what's the stock? Just a second, if I remember it correctly. Virgin Galactic Holdings. There we go.
This is not fair. You're bashing Elon Musk again. This is not fair.
So like this is like okay. Anyway, I'll wait for it. I'll wait for it. Look, listen, we're running out of time. Let me just a last instrument that I really wanted to pick up on, and that's going to be Bitcoin. So we're just gonna have some fun, and we're gonna finish off with this one. Look, with Bitcoin, I mean, I was like, I'm still somewhat bearish on Bitcoin, to be honest. I would love to see this one actually falling a little bit more to the downside, going a little bit further towards maybe the psychological $50,000 mark. But again, of course, time will show, time will tell. But at the moment, just if I go purely from the technicals, I'm leaning towards the downside on this one. But again, if we start clearing, let's say, the area, where's that hurdle here? If we start clearing the area somewhere around here, the 63,000 zone-ish, then probably, yes, we could start shifting our eyes more to the upside. But again, that's my view. I don't know. Do you have any views on Bitcoin in general?
The same as you. Yeah, I just could say the same thing. So right now, I think the current region is very interesting because what you don't see here in this chart is if you anchor a volume weighted average price to the start of the year, and which is very close to the launch of the Bitcoin ETFs, you will see that right now we are trading around this price, so volume weighted average price from year to date, in fact. So which means like market participants are right now, it's really like we'll call this a stable environment between bulls and bears. So it's not that bulls are massively ahead, and it's not that bears are massively underwater, or vice versa. Mm-hmm. And so what we finally need is an impulse on the upside or on the downside. And I agree that making it back and holding above 63 is a clear bullish sign, and I think we are then potentially headed for at least an attack, probably even higher than new all-time highs. On the downside, as long as we hold below, there is serious risk that we see a final flush, I think, back towards 50,000. Even though I have to say, when we look at where we started, where we traded 1 year ago, well, we are still massively ahead, right? So it's 100% from we're within the last 12 months. So it's like I don't really consider this to be a bearish environment at all. So in fact, it's it's very nice to see skepticism arising, let's say, and people are more like, okay, well, probably we are done now on the upside. This is beautiful, as is with gold, for example. So everyone was really going back to the laser eyes at the beginning of the year when we just went to new all-time highs, and now people are, well, tending to be more, how can I say, less aggressive in terms of their exposure, let's say, which is probably a very good sign, because this is an environment you just like to see, with a drift higher and then the continuous acceleration on the downside, which will, well, probably bring us up to, I don't know, probably 100,000 within the next 12 to 18 months, probably.
Yeah, could
But
be.
I-
I mean, but I think you need to attract, because look, I mean, the Bitcoin was rallying. I mean, they've then launched these ETFs and everything, and I think that people kind of, they attracted capital, and I think that it stopped moving because it kind of like buy the rumor, sell the news, right? And now I think that they need to. You need to drop the Bitcoin again lower in order to attract everybody into the ETFs, because I think that what we started recently seeing is like an outflow of funds, actually, because Bitcoin's not moving and everybody's like thinking, hey, I might as well pull it out right now. I'll
and
jump
go
in.
into Ethereum, right? So this is, I think that they are about to launch it, by the way, Ethereum. In fact, I'm not a Bitcoin guy, even though I love the blockchain technology. As I said initially, studying mathematics, you have to love blockchain technology and everything around this. But I think from a user perspective, I think Ethereum is more attractive. I think also from a risk reward perspective, somehow.
Yeah, could be. I, like I said, me personally, I love Ripple. Because the reason why I love Ripple is purely speculative, because it's they're battling the SEC still.
You're talking as my brother does. So, like, are you in crypto, brother? Yes, sure. Ethereum and then blockchain. Yeah, who cares about blockchain and everything? Like, have you heard about Ripple?
Yeah. I know. Look, I mean, for me, like I said, I'm just excited to watch this. It's like a nice Argentinian telenovela, you know, with the Ripple and SEC. That's what I'm enjoying the show. How it's like how
This is how you spend how you spend your vacation and your free time, like watching Argentinian telenovelas. Really? That's awesome. I love that.
You never know what Alejandro and Maria is going to end up being. You know, they're together or not together. So, you know.
It's awesome. I love that.
So yeah. Anyway, look, and on that note, ladies and gentlemen, I would like to thank Mr. Jens Klatt for killing you an hour or more of your life with me today. It was a real pleasure. Honestly, we'll have to wrap it up the show here. I think we went a little bit over an hour, but hey, look, ladies and gentlemen, I hope you didn't kind of suffer here too much. But hopefully you enjoyed the session. I really hope, Jens, we'll have another show again together. Maybe on your channel, maybe on our channel. We'll see how it goes. You can check out Jens's channel on YouTube as well. So yes, Jens, thank you very much.
Thanks for having me. And
really, let me just put you on a bigger screen here so that people would see you. And there we go. So yes, Jens, thank you very much. Thank you. I really appreciate that. Honestly, it was a great show, a great talk as always. What can I say? Nothing else, probably. It's like,
thank you very much.
And
guys, don't forget to subscribe and leave a thumb up here. And if you have questions, leave them in the comment box below. So I will check out the video, the recording, and see the questions. So I'll answer them. I promise, as I usually do.
Fantastic. And on that note, thank you very much, ladies and gentlemen. As I always say to everybody, hey, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you tomorrow in my daily Pitch International, 6 o'clock GMT time. So yes, tune in, and yeah, we'll go from there. So thank you very much, and bye-bye.
See you.